Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from PacifiCorp, and let's just say it involves a rather interesting financial dance with their parent company. We've got a deal that could reshape how they handle massive infrastructure projects. Get ready to understand a key move that could impact how PacifiCorp finances its future, and what this sale and leaseback really means for you. And before we jump in, if you love uncovering the real story behind corporate filings, make sure you are subscribed. Also, join our Discord community linked in the description for more insider talk. So, this report is all about PacifiCorp, a big energy player in the US. They've entered into some significant agreements with BAB2H LLC, which is a subsidiary of their own parent company, Berkshire Hathaway Energy Company. Think of it as an internal financial maneuver that is pretty common in large corporations. The main story here is about the Boardman to Hemingway transmission line, a huge 300-mile electricity highway that is currently being built. PacifiCorp is selling this project and then leasing it right back. This is called a sale and leaseback. Why do this? Well, it is a way for companies to free up cash. Instead of owning a big, expensive asset that is tied up capital, they sell it to someone else and then pay to use it. In this case, PacifiCorp is selling a project it is building to an affiliate and then paying rent or lease payments for it. Here is the financial core of it. BB2H is going to pay PacifiCorp an amount equal to what PacifiCorp has already spent or invested in building this massive transmission line. This helps PacifiCorp recoup its construction costs. The lease itself is for 20 years, with options for PacifiCorp to buy the line back every 5 years at its book value. That essentially means at whatever value it is listed on their books at that time. Now, for a big number, the total price BB2H is expected to pay for this project is up to a staggering $1.05 billion. That is a lot of money either flowing into PacifiCorp from its affiliate or being accounted for from the perspective of the parent company's consolidated finances. This sale and leaseback is expected to happen once the transmission line is ready to be used, which they anticipate by the end of 2027. Even during the construction phase, BAB2H will be making payments to PacifiCorp to cover its project expenses. This is interesting because the exact accounting for this deal is still being figured out. It could mean PacifiCorp will have to record a lease liability on its books, or even consolidate the financial results of the BAB2H entity associated with this project. The complexity here hints at the significant financial implications of these types of transactions. They are essentially saying, we're doing this deal, but we're still working out precisely how it sits on our financial statements. There is a crucial deadline. If the sale of PacifiCorp's stake in this transmission line project doesn't happen by the 31st of December 2028, or another agreed upon date, PacifiCorp has to pay back all the money it received from BH plus interest at a rate of 6%. This is a sort of fail. Safe for BAB2H, ensuring they don't get stuck if the deal falls through for any reason, especially if it is PacifiCorp's fault. This deal isn't just a handshake, it requires approval from important regulators, like the Federal Energy Regulatory Commission and the Oregon Public Utility Commission. This underlines how significantly this infrastructure project and its financing impact public energy services. The structure they've used is also designed to allow for similar deals on future projects, meaning this isn't likely a one-off. The full details of this whole arrangement are laid out in the agreements themselves, which are filed as exhibits to this report. These include the main purchase and sale agreement, a specific project schedule, and the master lease agreement. These documents are the guts of the deal, defining exactly how this billion-dollar transmission line will change hands and operate financially. Now, shifting gears slightly, this filing also flags the creation of a direct financial obligation for PacifiCorp. As they receive payments from PacifiCorp creates a financial obligation to that affiliate. This is the flip side of receiving cash. While it helps fund construction and frees up immediate capital, it also means they'll have ongoing payments and obligations tied to this lease agreement. And finally, as with any of these filings, to raise a section listing all the supporting documents. This includes the full agreements we just touched on, and a rather important looking attachment, the cover page interactive data file. This is usually an embedded data file that allows for easier analysis of the report's key financial information. Crucial for any analyst or investor wanting to crunch the numbers. Now, let's look at this whole picture. PacifiCorp is essentially using a financial tool to manage a massive infrastructure project. This sale and leaseback structure allows them to access capital tied up in construction, potentially improving their liquidity. The fact that it is an affiliate transaction suggests it's a strategic financial play managed at the parent company level to optimize capital allocation across its various businesses. The risk here is partly regulatory. These deals need approvals. Also, the potential requirement to pay back funds with interest if the sale doesn't close by a certain date, as outlined in the agreement, highlights a contingency that PacifiCorp needs to manage. On the other hand, having early purchase options means they retain the option to bring the asset back fully under their direct ownership if it becomes strategically advantageous down the line, and at a potentially favorable price. Based on this filing, PacifiCorp is proactively managing its capital for large-scale projects. The move suggests a focus on operational efficiency and financial flexibility rather than simply holding all assets on its balance sheet. While the exact accounting treatment is still being sorted, the overall strategy appears sound for a company undertaking major infrastructure development. Alright, that is our breakdown of PacifiCorp's latest filing. What is your take on this sale and leaseback maneuver? Do you think it is a smart financial play or a sign of something else? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.